USDA loans offer many advantages for Florida home buyers. In this short presentation, we're going to look at some of the benefits of USDA rural housing loans. We'll talk about some of the qualifying and eligibility requirements also for the program. If you're a home buyer and you have questions about the program, please visit us at coasttocoastmortgage.com. We are available to serve you 7 days a week. Okay, so we're going to touch on some of the USDA rural housing loan highlights for home buyers here in Florida. First, probably the key component with USDA loans is that this program still offers 100% financing in approved eligible locations throughout the state. Uh, Many of these locations, when we hear USDA rural, a lot of people assume rural is way out in the country only, but there are many suburban locations just outside of the major cities in Florida that still are approved for financing. We'll talk a little bit more about that in the next, in some of the coming slides. Um, the program not only is 100% financing, but it also does allow for the buyer's closing costs to be paid by the home seller. Buyers can roll in their closing cost and add it to their loan with a supporting higher appraisal. Short example below, let's say you're purchasing a home for $300,000, all your closing costs and maybe your prepaid escrows for taxes and homeowners insurance reserves, let's say that's $7,000 just to use round numbers. As long as the home appraises for at least $307,000, you can build that in to your loan. So essentially, no down payment, have your closing costs rolled into the loan, and then you can essentially come to the closing table with very little to no money out of pocket. Uh, Home buyers do probably want to allocate some funds just for the inspections that are generally required before closing, like your home inspection and maybe the appraisal. So that's always good to note. But again, if the supporting value is high enough, you can build that back in. Any home buyer can apply for a USDA loan. This program is often geared towards first-time home buyers because, as we know, really many first-time home buyers have one obstacle when it comes to purchasing a home, and that is the down payment that is required with many common loans like conventional loans or even other government-backed loans like FHA. USDA, again, it can be used by any eligible and qualified home buyer, and you do not need to be a first-time home buyer. There is no home buyer education courses or classes that you need to take in order to apply for a USDA loan. There are no limits, loan amount limits for the USDA loan. Buyers basically qualify based on their debt to income ratios. Since USDA they have household income limits that are in place. So with that, together with the debt to income ratio limits, that will often in itself limit the purchase prices. For the USDA loan. And we'll talk more about the household income limits in the eligibility slide. USDA loans also, they have low monthly mortgage insurance when compared to FHA loans or conventional loans where you're financing more than 80% loan to value. Many people know the term as maybe PMI, private mortgage insurance, monthly mortgage insurance. It's called different things depending on the program type, but this monthly premium is oftentimes more than half less than comparable programs. And again, when it comes to the eligible locations, many homebuyers are surprised to learn exactly what locations are still considered rural in nature. Okay, so just some more highlights. The program has, just like really all government-backed mortgages. Of course, USDA is a government-backed loan through the U.S. Department of Agriculture and Rural Housing. This program offers this low 30-year fixed interest rate. There is no early payoff or prepayment penalties if you were to sell, move, or refinance your home down the road. There's no penalties to do that. Again, just like any other government-backed loan. USDA, again, we touched it, it's not exclusively for first-time home buyers. Move-up buyers, of course, are welcome to apply. And most homes that are for sale, as long as they're in an eligible area, they're generally okay for financing. Again, this is for primary residences. There is no financing options are not available for investment properties, rental homes, or vacation homes. This is for primary homes. But as long as the property is located, a single family home, townhome, eligible condominium, uh, if it's in a eligible location, regardless of the home seller, uh, the house will generally be okay for financing. And again, it must be located in an eligible area, and the home must be in overall good repair and meet the basic safety livability standards that are in place by HUD. And then again, all government loans pretty much follow that same standard. Refinance programs options are in place for home buyers that currently have a USDA 502 guarantee program. So you can refinance later down the road if interest rates were to go lower. Let's talk about the two key eligibility components. This is very important. USDA, when it comes to qualifying for the loan, it's very similar to other programs in that they have minimum credit scores in place, uh, requirements in place as far as job history, debt to income ratio, and income documentation, things like that. That's all pretty standard with most conventional and government loan programs. But USDA is the one program that does have the separate eligibility requirements. And that is, again, the property location. The property must be located in a USDA approved eligible area. And home buyers that have questions about this, you can find the USDA map readily available. And of course, you can call us at any time and we can talk about your specific area in detail with you and help you look up an address or figure out if the property is eligible. So that's the first thing, is really the location of the property. The second thing, of course, is the household income limits. USDA does have limitations in place on how much income, gross income, the household combined can make. This can fluctuate depending on the county the property is located in, and these income limits frequently change each year as standard of living, cost of living, as all that changes, they adjust the income limits. But currently, for a standard family of 1 to 4 members in the state of Florida, the income limits gross income limits are $110,650. If you have 5 or more members in the household, that income limit goes up to just over $146,000. There are also deductions that can be taken out of the household income limit for home buyers that may have certain child care expensive dependents living in the household, maybe elderly members or members with disabilities. So there are certain things that can deduct from your income limit if you are near or just above that income cap. Again, if you have questions about this, please be sure to contact us because we can review this in detail with you and let you know the exact income limit. And again, the income limits that I've stated, that is currently for 2024, probably going into uh, most of 2025, but these can change, and often it's a good idea to refer back to the website or contact us for the latest income limits in your county. Okay, let's talk a little bit about just loan qualifying. Um, for the loan qualifying, really it's going to be greatly dependent on uh, credit history. That's always a big thing, of course, the primary driving factor with just about any mortgage. USDA, uh, most lenders and banks generally require a 640 credit score for buyers that are financing the maximum 100% financing. Buyers that have, though, maybe a 3, 5, or 10% down payment, they will have greater flexibility when it comes to the credit score requirements. Some of those buyers may be able to get approved with credit scores maybe in the high 500s or low 600s. Again, one thing we want to emphasize is credit score alone does not guarantee your approval. There are certain stipulations in place for buyers that may have had a recent financial hardship with maybe a recent bankruptcy or maybe a home default foreclosure type thing. There will be additional requirements in place for buyers that again have some of these recent hardships. Regardless of the credit score. Job history, generally 2 years of a consistent job history without any large gaps of employment. Small gaps of employment are acceptable and often normal for people that are switching jobs. This requirement, though, if you're a recent college graduate, oftentimes this requirement does not apply. Income and asset documentation, again, just like any other standard conventional loan or most, really all government loans, we'll want to document your income and assets, 2 years of tax returns, W-2s, and two to 3 months of bank statements and things like that. Debt to income, debt to income ratios are basically the ratios that lenders look at to see what portion of your gross income you're spending. There's two ratios, one for your housing expense, which includes your principal, interest, taxes, and homeowners insurance, all that combined, and then your total ratio, which is all your housing expense plus any other monthly expenses you may have, like a car payment, minimum credit card payments, things like that. But generally, they like to see your housing expense uh, not to exceed 29-30% of your total gross monthly income. USDA, the application questions, some of the questions you may be asked during the application. The application, again, is very simple. Oftentimes it's completed in less than 15, 20 minutes. But during the process, the loan advisor will often want to know, you'll want to know your 2 year history as far as your rental history or living history, previous addresses, job history for the last 2 years, gross income amount, duration at each position, each job over the last few years, your asset information, your bank accounts, retirement accounts, if you have like a 401k or IRA, you'll want to know the approximate balances in those accounts, obviously who the financial institution is that has those accounts, and then basic things like your social, date of birth, and standard contact information. As far as documentation after your loan application, you'll want to have together your 2 years of most 2 years recent tax returns and W-2s if you're a regularly employed home buyer. If you're self-employed, or 1099, you may not have your W-2s. That's fine, but again, just 2 years on that, and then 2 to 3, probably 3 months of your pay stubs in bank statements. Also, a copy of your most recent retirement account statement. That's generally a quarterly statement. So, for any retirement accounts, you probably want to gather that statement up. And then, uh, if you were a renter, you probably should have your landlord their contact information for your rent verification, and then a copy of your ID or driver's license. That's a basic rundown of the program uh, qualifying and eligibility requirements. Again, please reach out to us 7 days a week with any questions by visiting coasttocoastmortgage.com. Thank you.